Hey folks, Invest IQ here, investing ideas, earnings, picks, and options plays. We got another one coming up here for you on August the 16th, 2022, after the market close. And this one is ticker symbol A, Agilent Technologies, Inc. So this one is kind of an interesting one because we're actually going to talk about a possible options play for this guy. Now, if you take a look at the data, we go back from 2013 up into about May of this year. And when you look at the numbers, they're not particularly compelling, right? The 1 day is 18.29%. The 5 day is 36.6%, and the 3 day is 37.13%. And by clicking off the other two, you can kind of see something that you might not have been able to see with all of them showing, which is the general trend is upwards. It just sort of appears to be that this earnings play over this period of time doesn't really seem like it would have netted you that much money. So remember, looking at the 3 day chart is like saying if I went every quarter for every earnings for Agilent Technologies and I bought at the close the day before earnings and I sold 3 days after earnings and I stacked up all my gains and losses, this is what you'd have at the end of that period of time. And so you can kind of look at it and say, okay, so for 5 days it would look like that, and for 1 day it would look like that. So 3 days kind of looks like the sweet spot if you had to pick a trend out of the three. But let's take a look at some of the other pieces to it and say win rate. So 66% of the time you were a winner after 1 day, 58 after 3, and 63 after 5 days. We look at the gain loss, and 0.48% for after 1 day, 0.98% for 3 days, and 0.96% for 5 days. It isn't a whole lot, right? When you look at those stats and remembering that this is the average. It doesn't mean that your win would usually be somewhere close to the 0.96%. It means when you win one of these amount of times over that period, if you netted it all out, this is the average, right? So not compelling to do a trade on their own, but when you do look at this and you say, you know what else do you see from these three things, right? They are roughly all going the same direction. When you look at the quarterly, this kind of gives you something a little bit interesting in terms of when you look at the dimensions of what's happening, because each of these dots is sequential in time. So, for the May earnings, this is what happened after 1 day. Had you done the trade and you're long, the day after earnings, it's closing and it's at minus 4.45% from what you bought it at the close the day before earnings. But lo and behold, take a look. After 3 days, you would have been up 3.63%. And after 5, it fell down a little bit to 1.25%. So now think about this. If you're looking for an options play, if you can imagine, you're actually going to wait until earnings day. And instead of selling on the day after earnings, you're actually buying on the day after earnings. Now, there's a couple of advantages to this. When I say buying, I mean going long. And in this case, I'm actually thinking more along the lines of options. So, folks who are not familiar with it, you can kind of do some Googling, and maybe we'll do some videos on it later on. But for now, there's a thing called implied volatility. And basically leading up to big events like earnings, the implied volatility really puffs up a lot. And what it means is it becomes difficult to make money on the long or the short side because the prices of the calls and puts are so inflated. Well, guess what happens the day of? All of that gets deflated. So, you might actually be able to make a really great play by waiting for actually earnings day or the day after earnings, going long your calls then and looking to sell it between 3 and 5 days. And while it doesn't sound like a whole lot, take in that minus 4.45%, the distance from minus 4.45 to 3.63 is more than 8%. So on an option, that would certainly net you some decent gains, right? Let's take a quick look and see what the option chain looks like for Agilent. And And actually, before that, we'll actually go and just take a look at the volume. So this is a chart of them, and so you can see average volume is 1.62 million shares daily, and this is roughly $131 stock. If we flip back to the option chain, so that's some decent volume. If we look at the option chains, today is August the 11th. If we look at these option chains and you can tell by the colors if you're not familiar with it, the current daily close price is somewhere between 130 and 135, because we can see by the coloring this is sort of in the at the money area. So those are listed. I mean, I know it's only a week away, but those are listed for $4.30. That's a whole heck of a lot of leverage against $130 stock. This earnings is on the 16th, so you might decide, it's not enough time. This expires on the 19th, so you might go out one more month and go to September and use that. But you can kind of see if this stock went up 8%, 8 on the 130 is going to be about $10. So you can imagine what kind of a gain you might be able to put away if you're buying something and selling it a couple days later, and the price has actually gone up $8 on an $8 call. Probably likely be able to make somewhere in the 30 to 60% range on your options. So, but that's the idea, folks, and that's pretty much it. If you like this video, hit the like button. Hit the subscribe button, hit the bell button to get notifications for when we put new videos out, and leave your comments, folks, below. Leave your questions below. We love to hear from you, and we're always interested in hearing different ideas or requests to do particular stock symbols or even investing ideas. So that's about it, folks, and thanks for watching as always.